Ladies and gentlemen, welcome back to the channel. What a pleasant turn of events. AMC stock is up 3% today. That's kind of unheard of these days, at least for a while now. I think the last 3% day we had, if I'm not mistaken, was December 4th, and the stock actually rallied about 9%. Back here, December 11th was also a 2.6% gainer. But this will be the best day that we have had in about a month, almost exactly. So things are looking good so far. We're going to go over why that is, what's going on today with AMC stock and our markets. We're going to look at some of our favorite indicators like these stock twits, sentiment gauges, and much more. So let's get into it. Hit that like button and subscribe to the channel if you have not done so already. First things first, AMC stock up about 3% as we previously just established. No company-specific news for AMC. There's nothing in particular that is causing the stock to go up 3% today. The broader markets, on the other hand, are doing well. So I don't think this has really anything to do with AMC in particular. It is likely just this effect from stocks already rising. Now, why are stocks going higher today? Well, you could say that stocks have, broadly speaking, been getting destroyed. Right? In 2024, one of the worst starts to 2024 that we have ever seen. So stocks were starting to get a little oversold. So what's happening today? People are going out and buying more stocks. Now, something also notable to point out is that a lot of Wall Street wasn't in the office from, the week before stocks. The week before Christmas. Now they're coming back. This is the first day back for a lot of Wall Street. So there's more participation and there's likely to be higher volume. Now this day is significant to me because of that fact. And because of that fact, stocks going higher to the degree in which they are, the NASDAQ up 1.61%, Russell up 1.26%, and the S&P up about 0.77% is a pretty good sign for what could be to come as long as nothing just absolutely breaks. Now, Fed Lori Logan said over this weekend that the Fed should reduce the pace in which they are letting bonds run off their balance sheet. Currently, the Fed is letting about $90 billion a month roll off of its balance sheet, which is essentially a drag on the economy, right? A drag on banks because banks have to pick up the extra slack. Banks don't have as much money. Rates, there's more pressure on rates going higher in the bond market as well. So that's just all around very restrictive to the economy and also restrictive to our markets. Now, whether or not the Fed actually does that or we get anyone else saying that, maybe it was just Lori Logan's opinion. We'll have to, wait and see. But Fed Bostic did speak as well not too long ago. He's not the reason that, stocks are doing well today, but he's definitely helping to boost things at least a little bit. Fed Bostic says inflation has come down more than I expected. Fed Bostic, the rise in unemployment has been far less than what would typically be the case given the reduction in inflation. So that also looks good. He says the Fed is in a very strong position right now. The Fed can let restrictive policy continue to work to slow inflation. I expect the process will remain orderly. Families are catching up to past price increases. The pain of higher prices is easing and sentiment should follow. Goods inflation is back to pre-pandemic levels. Services inflation is moving more slowly and not expecting big drops. Many economic measures are back at levels seen in the years immediately before the pandemic. So saying things are really getting back to where they previously were. At this point, shorter term measures of inflation, such as over 3-6 months, are more important. They are pointing in a positive direction. That's kind of worded weird, but if you look at recent trends in inflation, not just year over year, but like, month over month rates over the past 6 months, then inflation is like 2%, right? That's essentially what he's saying there. Fed Bostic, we're on a path to 2% inflation today. The goal is to stay on the path. He said he is not comfortable declaring victory. The Fed needs to remain diligent and short-run attentive. He says top-line job numbers have been pretty strong, but the recent strength has been focused in a relatively small part of the economy. He said concentrated job growth means slowing is occurring. The question is if job growth overall hits a cliff, if those strong sectors start to slow down, maybe there's a bigger problem. He says he sees 2 quarter-point rate cuts appropriate by the end of the year. So not as much as what the markets are currently pricing in. And let's take a look and see if Fed policy has changed based on this speech. And we'll go ahead and refresh that just to be sure. Does not look like it. It looks like you're still pricing in 6 rate cuts with 39.7% odds. The odds actually jumped today. There's a higher chance today than there was on Friday of 6 rate cuts in 2024. For March, there's a 68.8% chance of your first rate cut. That's up from 64% on Friday. So that's up almost 5% as well. So it doesn't seem like the markets are, focusing on 2 rate cuts, in which Fed Bostic just said, but they're more focused on the fact that Bostic is pretty confident the economy is doing well, and in other words, we're probably going to see a soft landing in Fed Bostic's translation here. And I think that's another reason markets have been selling off so violently is because, the data that we've gotten recently, like this, the ISM services employment, look at this drop. You've never seen anything like this besides very recessionary periods. You are lower now than you were during the dot-com bust. You are at lows, well, not lows technically, but levels in which you've only seen before in recent times since 1997 during 08-09 and the brief period of the Rona crash. This is not exactly a great sign for the economy. So I think a lot of people were kind of fearful about a recession, and that's what a lot of last week was as well. It was kind of that sell first, ask questions later kind of mentality. There was also a lot of profit taking that was taking place as well, because why not extend your potential tax burden 14, 16 months from now, instead of, paying them in 4 months, right? Just the difference of one day between selling on December 31st or January 1st delays that tax payment, 14, 16 months, however long, it is when you decide to pay your tax bill. That's part of why stocks are selling off as well. There's a lot of big gains out there, and I do think you're seeing more of a broadening out of our markets today. If you own any other stocks besides AMC, it's pretty clear to see that most stocks are doing pretty well today. A look at the AI Investor Sentiment Survey. This is going to change. We're going to get a new survey, and these numbers are going to look way different. I expect the bears are going to pick up big time in the survey that will be coming out Thursday of this week. As of right now, you do have 48.6% of investors bullish, neutral investors at 27.9%, bearish investors at 23.5%. I think bearish investors could hit as high as 30, bullish investors probably around like 43, and neutral investors might just roughly stay the same, but we will have to see, that's for sure. Now, specifically with AMC stock, let's give you a rundown of the option activity here today. AMC stock is now at 3.29%, so looking even better now. Volume, 74.66% to the call side, 25.34% to the put side. If you do look at the interesting flow sentiment, it looks like we've only seen one order. That was a January 19, 2025, $3 put worth $322.5 thousand with a positive order value of 0%. So one bearish trade from hedge funds and institutions today. Overall, not a big deal. Now, if you look at short interest of free float, 8.38%. Which I think these numbers are BS. I don't think they're correct at all. I think AMC stock is 100% sold short, but I can't quantify that for you. I can't put that into numbers or a chart to, express that. So we do go over the Ortex status still because, don't just listen to me. Ortex says 8.38%. I think the stock's 200-300% sold short. Come to your own opinions and let me know down below in the comment section how short you think AMC stock truly is right now. I'll say even if it's not 200%, 300% sold short, highly doubt it's only 8% sold short. So something strange is happening. $108.62 million worth of short positions. Days to cover 1.02. 21.01 million shares currently sold short. Shares out on loan 18.55 million. 1.07 cost to borrow fees. Utilization of 29.04%. And a short score of 52.79 out of 100. So, not the most crazy data over there, but nonetheless, I do like to go over it each and every single day for you guys. Now, taking a look at AMC over here on StockTwits, we should see something a little bit better than maybe what we have been seeing recently. Let's see. Here's the gauge. Dun, 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 dun. Bullish, extremely bullish. Investors coming in with a sentiment of 84. That's great. Message volume, though, is on the low side. This tends to happen sometimes on Monday where you just don't have a lot of people that are getting back to, the normal trading week, right? So we'll see how that does go. I do think if AMC stock especially continues higher, there will be more activity, more volume, and the sentiment likely to go even more bullish. Today is a better read than not, I would say, overall, over here with StockTwits. Now, if we take a look at the Stock O Tracker data itself, we do have 2,000 calls currently in the money expiring this Friday, 52,000 calls out the money. In the money puts at 16,185. Out the money puts at 29,846. So there is that. If we take a look at 10-year Treasury yields, 10-year Treasury yields down about 4.5 basis points today, back under 4%. That's also great news. That's also a reason why stocks are performing a little bit better today. If you take a look at the 10 and 2-year yield curve inversion, you're inverted 35 basis points. You actually want to see this fall if you are a bull. If you're a bear, you want to see this start to uninvert, because when you start to uninvert, that's when recession fears or recession could be around the corner, and that's typically when stocks tend to do poorly, is when you actually uninvert. Reinverting tends to actually be a pretty good thing for the markets overall. So that is pretty much it. We didn't not have much as far as economic data or really anything else. A lot of biopharma buyouts and speculation going on out there. And that trade, maybe you guys seen the video here on the channel, RXRX, I put out like a week ago. Yeah, that baby was a 300% return. So, yeah, kind of crazy. Watch biopharma, though. I think there could be a lot of opportunity in, select names over there. But again, overall for AMC, you're still on the oversold side at 29.09, 29.01 for the RSI. The MACD's pretty neutral overall, not doing a whole lot of anything. AMC stock on Friday hitting new multi-year low. So even though you're up 3.19%, you're only up 17 cents because you're coming from a very low place. So we definitely want to see a larger rally start to kind of materialize here. AMC stock is by no means out of the woods. Neither is the broader markets. AMC is at $5.33 per share. But today could be the start of something much larger. So we'll have to wait and see. Let me know what you think down below in the comment section. Hit the like button as well as subscribe to the channel. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.